Welcome, everyone. Sam here. Good to see everybody. We were off last week, last Friday, but let's pick it up this week with our trade of the week, which is really more of a lesson. I want to make sure that people understand how the markets really work. Welcome, everyone. And Sam here. Good to see everybody. Sorry about that. A little issue with the sound. I think we're good now. Yeah, I want to make sure everyone understands how the markets really work, and you'll understand. You'll see why in just a few minutes. So we do have our financial strategies workshop. We can get some more insight. One of the big things, I always find it's just important to start with are the reasons why people don't do well at this. And there are three big mistakes, and that is part of the focus of the workshop. Let's move forward. So as always, we're going to talk about supply and demand and apply it to some of the trading opportunities we had this week in the market. We'll go over those. These are all trading opportunities we had in our sessions or we took in our accounts. They always come from one of those two sources. We focus on one rule-based strategy, supply and demand, and we apply it to any and all markets: stocks, futures, forex, options, real estate, cryptocurrency, bonds, you name it. And then, of course, day trading, swing trading, longer term investing, and all that. Today we're going to focus on really a couple things. We're going to look at we had a bunch of opportunities in the S&P and the Russell, and we had them all week long. Normally we focus kind of on one trading opportunity that we had here. Today we're going to focus on how we operated in the markets every day, Monday through today, and why. Okay? You may get a day trading feel from it. That's not the purpose. The purpose is to identify where prices are going to turn in markets and where they're going to go. But I want to walk you through, how we do that. As always, we are not investment advisors, and there is absolutely no guarantee of success in trading and investing. In fact, for most people, the odds are overwhelming that they're not going to do well. We're going to go over that in a few minutes also. And so, be careful with that. Always know what you're getting involved in. Understand the risk. Make sure you're okay with the risks. And even with that, make sure, again, a lot of people say, make sure you're okay with the risk. Well, how many people actually understand the risk that they're taking on? Not a lot of people do. All right. So along the lines of disclosures, right? And I guess, also too, there's no guarantee of success when it comes to buying and selling anything, right? Think about the Super Bowl. Companies pay a fortune for 30-second, 60-second ad space, right? I don't know. What does a company pay for that? Some companies, I think we've read, pay upwards of $1 million for 30 seconds, right? Well, they're putting out a certain amount of money, hoping for a certain return, right? Are they guaranteed that that's going to happen? My guess is, and it's only a guess, is that some of those companies that advertise during the Super Bowl end up getting a fantastic return on their money, while others, it's a complete waste, right? Same thing here. When we trade, when we invest, we're making a financial decision that includes risk. Sometimes it's going to work, sometimes it's not, but you have to make sure you understand the risk and that you're okay with it. Now, why am I spending so much time on this? Well, a little while back, I asked Google a question. I said, Google, what percentage of traders lose money? And Google said 96%. Now, I know none of us know what the exact number is, but I think we all agree it's pretty high. So then I asked Google, what's the most popular trading strategy? And you can see the list here. And I think the most important one is that one on the top. People follow trends. Okay? Or they make trend the foundation of their strategy when it comes to making buy and sell decisions. Right? I just figured let's ask Google and see what Google says. Some of these others are interesting. If you look at number 4, everybody adds, not everybody, a lot of people add things like Fibonacci and all this other stuff that has nothing to do with the actual buy and sell orders that make up the market's real supply and demand. Range trading, scalping, all this stuff. And I'm sure the list goes on. But anyway, there's a number of you in here today, and I'm sure most of you are aware of some of these numbers. So I have to ask the question, why in the world are we here? If almost everybody that tries to do this fails, you got to be kind of crazy to even try this, right? I'm kind of joking there. Well, I'm not. I mean, a lot of that's true, right? Yeah, exactly. FX Green. I see in the chat here. If you're saying if you try to pick tops and bottoms, people say you're crazy. That's very true. They say, "Oh no, it's all about trend. It's all about trend." Okay. So I want to take you back for a minute because this whole Google thing up here reminds me of when I started on the trading floor of the Chicago Mercantile Exchange, and that's where the strategy, that's where the strategy comes from. I developed it down there, but it all starts with, and I'm not going to get deep into detail here because the main point is very high level. Okay. What I saw on the trading floor that hooked me into this business is this. I saw that banks and financial institutions tended to make the right decisions most of the time when it came to buying and selling, and as a whole made a ton of money. Okay. And I worked on the professional. I worked for one of the big financial institutions then, right? So I facilitated those orders. I saw that happen at the transaction level. I didn't need anybody to tell me banks made a lot of money. I didn't need anybody to tell me that they primarily made good trading and investing decisions. I was handling the orders. I saw that. On the same time, your average retail trader and investor, like Google is telling us, tended to be wrong in their decision-making process, and as a whole, either lost money or never came close to achieving their financial goals, right? So, what really hooked me into this business was, and I handled their orders too, okay? So, what hooked me into this business is when I realized, wow, one group is so good, the other group is so bad, yet they're both buying and selling in the same markets. Just like Google is saying, the majority are so bad, but this group over here does so good. What is one group doing that the other isn't? Right? Yeah, I see some comments in the chat. I see FCC. I think you mean to say FTC there. Yeah. Yeah, the FTC is trying to, I wasn't a big part of that case, but the FTC is trying to win a court case. And that is actually somewhat in the past now. So it's, but they're trying to win a court case. And if they're saying supply and demand is a scam, then I disagree. This is how the markets really work. And that's all we're talking about. And that's all I'm suggesting. And, this is not, nobody owns supply and demand. Adam Smith doesn't own supply and demand. The problem is, again, if you really focus on what we're, on the screen here, why do so many people do so poorly at this? It's because they don't understand what the professional understands, which is how you make money buying and selling anything in life is exactly how you make money buying and selling in the financial markets. Does that make sense? Okay. The people that do understand that have a great chance of doing well, but most people don't. Most people follow trends. Most people, which means they buy after a period of buying. They sell after a period of selling. I was on the trading floor back in the 90s. And, when I got down there, I was a little disappointed that I wasn't in the trading pits because it seemed like that's where all the big money people were. I was right outside of the trading pits, facilitating institutional order flow. Wasn't allowed to trade my own account. It was illegal because of the information I had access to. But now looking back, wow, am I thankful that it worked out that way because it allowed me to see how this all really works. Yeah, and I appreciate you saying, it's my strategy. However, nobody owns this strategy. All I did was maybe what I did is put rules around it and suggest that here's what that looks like on a price chart. But everything I'm talking about, everything we say, I say, this is how the markets have always worked. That's how they're always going to work. It's that simple, right? Okay. So the key is to stop thinking and executing like a novice trader and investor and start thinking and executing like a professional. And, and looking at all this, and the one comment on the FTC, a lot of people may not know this, but I'm a big fan of the FTC. Believe me, in a industry and world where you have so many strategies that have nothing to do with how you make money buying and selling anything, you don't just need the FTC. You need as many and as strong regulating bodies as possible. Okay. All right, let's keep going. So the only two questions that matter when you're trading and investing, and certainly the only two questions that mattered on the trading floor, are this: where is price going to turn and where's it going to go? And as we said, as I went over a couple weeks ago, I'm not going to spend much time on this because we went over it. Significant supply and demand imbalances cause prices to turn. Okay. A lack of significant supply and demand facilitates price movement. Does that make sense? Yeah, and the other problem is, and I think it hits to a bunch of things in the chat. What's happened over the past, I'd say since about 2000, I don't know, mid 2000s, right? We're only 2020, but like maybe I'm saying maybe 2009, 2010. Okay. Here's what's happened, and this is really, really important. Okay. Rules, like I remember when we started talking about this. We only started talking about this because people started asking, right? The rules that we go over in our sessions now and all of our programs that we do, our trading, Jasmine and I and the whole team, the entire team, we have a nice strong team. It's all one set of rules, and it's all the original rules. Nothing's changed in the past 20 years. It's 2020. The past 22 probably years since we kind of started putting this out there, since people started looking at charts. Nothing's changed. What's changed is many people have come along and complicated what is really a simple strategy. They've added rules that don't make sense. They've added rules that have, that don't, that twist and turn the whole simple supply demand concept. Does that make sense? Okay. It's all just about having the right rules. And, but there's so many different versions now of, there's this instructor over here saying this and that person over there doing that, and it's all over the place. And that's one of the three reasons why we started the new venture. It's because it's like, wow, it's like, how did supply and demand get so complicated, right? Jasmine and I haven't changed anything we do. Anyway, yeah, and I think you'll find that, Manuel, that the simpler you keep it, just to the basic rules, and I know everybody doesn't have the rules. I'm not suggesting you do, but that's what's key. Okay, once you throw a moving average around it, once you add trend into the equation, good luck. Now, you're wrapping rules around the strategy that have you not buying at demand, but buying higher, not selling at supply, but selling lower, and, and all that other stuff. Okay. Anyway, let's keep going. All right. So again, we want to look for the significant imbalance. Understand that supply and demand is everywhere in the markets, right? Every time you have a a trade, it's because there's supply and demand, a willing buyer, willing seller, right? Okay. But what causes prices to turn is when at that price level, there's a big supply-demand imbalance, because once all these sell orders are filled, you still have a lot of demand left over. Price has to go higher. It always will. Okay. Yeah, and I see other stuff in the chat here. That's probably, if I had to say, what's the number one thing that our members appreciate? It's the fact that everyone on our team, speaks one language, one strategy, one set of rules that somehow has just gotten so complicated and convoluted. You could search the internet for supply and demand, or there's just millions of things on it, and it's all over the place. The rules never changed, right? We're not changing gravity. How are we going to change supply and demand? Yeah. All right. I went over this a couple weeks ago with you. Let's speed things up here. What matters is, where are we in our little supply and demand diagram here? In the novice space, where there is a lack of a major supply and demand imbalance, we want to do nothing. Why? Because the probability is low, the profit zones are small. So why do we want to take on risk there? Okay. At the same time, up at supply, where you have a major supply demand imbalance, that's where we want to be sellers, either initiating a short position or taking profits on long positions. Same thing down at demand, where the imbalance is significant. We want to be buyers there. Why? The probability is high and the profit zones are substantial. Make sense? Now, as we get into the chart, which is what we're going to do next, let's look over at actual volume. So our red and green friends here represent potential volume. This is demand and supply. Okay, the chart is going to look the opposite. The actual volume that you get in a market or on a chart, okay, is going to be very high in the novice space. It's going to be very low out at supply and out at demand. Does everybody clearly understand that? Okay, the actual volume, meaning most of the candlesticks or lines or bars on a chart, okay, are going to be in the middle. You're going to get very little activity out here and very little activity out here. All right, so make sure that you understand that. And along those lines, okay, since most people take action in the novice space and very few take action out at real supply and real demand, can you start to understand what Google is saying? Okay, it's this same story, this simple epiphany that I saw firsthand on the trading floor. What is most of the world doing that the tiny little group of banks and financial institutions are not, and vice versa? Why is one group making all the money and everybody else not? It's all the story, and you can start to see it on the charts. Let's put it all together. Now, what does this look like on a chart? At the end of the day, where you're looking at here, this is all that matters. Okay, let's look. So this should start to answer a couple questions. And then, so we may have looked at this a couple weeks ago, but I want to go over it one more time, and then we'll go into here's how we applied it this week in the markets. And this is how we'll apply it next week in the markets and the week after. So we're looking at a chart. Remember, the presence of lots of trading activity and lots of volume tells us we're in the novice space, because if there was a significant supply-demand imbalance in the middle here, you wouldn't get all that trading activity. It wouldn't be physically possible. Okay, so we identified a couple demand zones on top of each other down here. This was in the NASDAQ. And we just waited for prices to come down to demand or wholesale prices. All right. A little bit later, I say a little bit, I think it was a couple days or so later, price came down out of that novice space, dipped into demand, and the market's gone up ever since, and there hasn't been any supply. So we haven't had supply in the NASDAQ. So we just keep buying pullbacks to demand zones until supply shows up. And believe me, when we get to a price point in these markets where supply does exceed demand, that footprint will be crystal clear on the chart. All right, it has to be. So again, understand why look at how little, you get barely any trading down here in demand. Why? Because there's so much competition to buy. Right? You can sell as much as you want in the novice space. Good luck with that. You'll make the brokers happy. All right. I glance at the chat every few minutes, so if I miss a question or two, I apologize for that. How you doing, Suresh? India's great. I love India. Fantastic. I was in Goa, I think it was a couple years ago. Fantastic place. Anyway, and wonderful people. All right, so the most important thing is, what does this look like on a price chart? I'm sure, I'm guessing we all agree with supply and demand and how it works, right? We all learned this in school. Nothing new there. But what does this look like on a price chart? Okay. So the presence of a lot of trading activity and all this volume tells us we're in the novice space. Okay, and we have very specific rules to define that. That's the key. We have to, we have rules for everything. Not a lot of rules, not complicated rules, but we have rules to define that, and that's what's important. We have rules to define our demand zones. Okay. Notice these are two yellow circles. They're not two yellow boxes. Well, those yellow circles come with a certain amount of probability. We define that. All right, let's keep going. So what I want to do is let's go look at every day this week. Monday, Tuesday, Wednesday, Thursday, Friday, today. And the question we ask ourselves every day is, where are we in relation to this? Where is price in relation to this? Today, we're going to focus on the equity index markets, the stock market. Okay, whether you're trading stocks, ETFs, equity index futures, it's all the same conversation. Okay, so every day we want to assess, where are we with this, with our supply and demand diagram here. Are we in the novice space? Are we up at supply? Are we down at demand? Okay, and this has little or if nothing to do with day trading or range trading. Okay, day trading, swing trading, investing, we apply the rules equally. Okay, any market, we apply the rules equally. Proper trend trading, we apply these rules. That's how we get in the trend at the beginning. We want to be the shepherd, not the sheep. Okay, so let's start with Monday. One of the tools we have for our members is the gallery. It's where we focus on where the charts are suggesting that banks and financial institutions are buying and selling in the markets. And here we were looking at equity index markets. You can see all the markets on top. But we were looking at the Russell and others. Okay, so notice all of this trading activity right here. Okay, price went up with no problem. And all the trading activity up here. The first fresh demand zone that met our rules to qualify for demand was down here. Okay, this stuff in here is not demand. This stuff opens up a profit zone for us. It's all about the rules. Okay. Anyway, price came down at some point, in the morning on Monday, and dipped right into our demand zone, where banks and financial institutions are buying, and novice traders and investors are selling. How do we know that? Or how can we be relatively sure of that? Well, look at this gap up from this level. See this gap? Who has an account size to cause a gap like that in a major equity index market? Is it anybody in our group here today? If you say it's you, you're going to be the most popular person in the group, but you're probably going to have to buy lunch for everybody. Right, exactly. So it's right, banks, financial institutions, the smart money. And we say banks and financial institutions, but it doesn't matter who it is. It's the smart money. It's the big money. They have too much to buy here. The competition to buy is too great. That's why you get a gap. Who would sell after a decline in price and into a price level where the chart is already telling us demand exceeds supply? Right? Only someone that doesn't understand that concept. All right. So that was Monday. But again, the key point here is we waited for price to dip out of the novice space into demand. Okay. Okay, great. Let's keep going. Let's look at Tuesday. So Tuesday, by Tuesday, I think the market went higher, which is fine. Notice we didn't have any supply in the Nasdaq. Or, I'm sorry, in the S&P here. It's on that day, and but price was trading up here. Okay. Again, look at all of this trading activity. The only reason why price why there's so many trades here, so much trading activity happens up here and in here, is because there's a lack of a supply and demand, a significant supply demand imbalance to stop that. The reason why there's so little trading at our demand zone is because the supply demand imbalance is so great. It's so strong. It's so big. Okay. Therefore, we need the patience and discipline to wait for prices to fall out of the novice space and down into demand, where it's only going to stay for a short period of time because there's so much competition to buy. Okay. All right. Let's keep going. Now, Wednesday was an important day. Really focus on Wednesday. So Wednesday, when we looked at the Russell on the right here, okay, it was trading right here in between our supply and demand zone. So if prices stayed here on Wednesday, what should we do? Should we buy? Should we sell? Should we do nothing? And again, this it looks like we're just day trading every day. That's not at all the point, right? The morning session that I deliver covers the major markets in bigger time frames, looking for major market moves. But right after that, we have our exchange day trading sessions. So we're always looking for, obviously, swing trading opportunities, day trading opportunities, and so on. But I don't want you to think like this is just, here's what here's the day trading opportunity every day. These were, but that's not the point. Right, do nothing. Exactly. Okay. Why do nothing? Because the probability of taking action in here is low, which means the odds of losing money, whether it's a day trade, swing trade, whatever, the odds of losing are high. Why would we do that? We only want to take action and risk money when the odds are stacked in our favor. The key is you need to be able to identify when that's the case. Now, the other thing we had going for us, and I typically don't share stuff like this, on YouTube, but I wanted to today. We also look at the bond market, which is typically not always an inverse market to equities, stocks, right? Helps us understand, again, where price is with regard to supply and demand. Are the odds stacked in our favor? Are they not? So the bond market on Wednesday was also sitting right in here, not at supply, certainly far from demand. So the bond market was telling us the same thing as most of the equity index markets. Okay, as far as a entry into the market today, from a day trading, swing trading, longer term investing perspective, not a good idea. Okay, so we just let price stay in the middle. Look, in the middle is where it spends most of its time. Right? I'd say 90% of the time, any possible market you're looking at, price is somewhere in the novice space. And it's because of the competition to buy and sell out at the extremes is so strong, it eliminates itself by forcing price back to the middle, if that makes sense. Yesterday, okay, so looking at the Russell again, here we go. This was Wednesday, and then yesterday we had a rally in price. I think there was some good news. I forget, but I think there was some good news yesterday. All that did was bring price out of the novice space for a very short period of time and right up into our supply zone that worked well for us early in the week or late last week. Okay, and we'll take these levels 1, 2, 3, 4 times. It depends. Okay, and we have a rule around that, and it's not just did price touch the level. Okay, so we have rules around that. All right, so now look at the chart. In fact, look at the one on the left. So this is actually a screenshot from today's session. I asked our members, I just asked them, hey, who took some of these? And members were sharing some stuff with us. Of course, haven't verified any of that, but just it's always good to get their feedback. So now take a look at the trading activity here. Does everybody see the area that I'm circling in the middle? Okay, the beginning of the week and late last week, all we had was our supply zone, and then we had another demand zone that was much lower. Okay, that's what we had. Now, okay, so we had our supply zone, our red friends here, and our demand zone, our green people down here. Okay, and that's what we had to start, going into this week. And what we would expect is that very little trading will happen up here. Very little trading will happen down here. And most of the trading activity by the end of the week will be in the middle. Okay, just like we went over here. Potential volume, the supply and demand, versus the actual volume. Now, going back to that day, so now, by the end of the week, again, we can see supply and demand did exactly what it should, exactly what it always does. This doesn't change. Okay. Most of the trading activity this week, I'd say probably 95 to 98% of the trading activity this week was somewhere in the middle. The least amount of trading activity was out at our supply and demand areas. Okay. That's where the significant imbalances are. And it's important to understand the rules to identify those levels. I can't tell you how many times people will ask me, hey, can you look at this supply zone or demand zone? It didn't work, and I don't understand why. It's like, well, that's not a supply and demand zone. Okay. So, there's no need to rush into trading unless you know what you're doing. There's no need to, try to find your supply or demand levels, wholesale, retail levels, unless you know what you're doing. No reason to think about risking your hard-earned money in the market unless you know what you're doing. Okay? Don't forget, this whole trading and investing game is simply a transfer of accounts from those who don't know what they're doing into the accounts of those who do. Right? Don't let anybody pressure you into trading. Don't feel pressure because you see someone else doing it. Understand what you're doing before you start doing it. Now, to keep things simple, again, back to the beginning, I do have some good news. The good news is everyone in our session today and anyone who watches the recordings, everyone knows how to do this already. And let me explain what I mean by that. Okay. the most important thing I learned early on was how you make money buying and selling anything in life is exactly how you make money buying and selling in the markets. And we've talked about this before. We talk about Costco sometimes, right? It's a good example. It's Friday today. Costco has been open all week, right? They're probably open 7 days a week. I don't know, but they've been going just like we operated here in these financial markets Monday through Friday. Costco was open Monday through Friday. And what did Costco do all week? What actually happened in Costco? What are the two things that happened? People came in the store, they bought, and Costco sold, right? And that's what happens every single day, right? Now, all of us go into Costco, right, and pay Costco's retail prices. Costco buys those items at wholesale prices. And I know we all know that. That's how they make money. Okay. Now, is there anything that I'm showing you here that is any different than what Costco is doing? Now, we looked at financial markets here, but couldn't we be looking at the buying and selling activity of, I don't know, what's everybody's favorite item at Costco? Is it the crab legs? Is it, it's always the stuff with the free samples, right? The cake, Costco makes great cake. What's your favorite thing at Costco? I don't actually go to Costco that much, but I've been there a few times. But whatever it is, you know, that could very easily be the charts that we're looking at here, right? There's no difference. All right, Billy, it's the ice cream. So if the top of this chart said chocolate ice cream every day, it's Costco buying at wholesale, demand, and all of us buying at retail, supply. Now, I know a lot of people don't like to hear that. People don't like to hear that. There's a lot of people out there that like to think that these financial markets are, that you have to be this Ivy League walking calculator to understand this stuff. That's not how they work, right? And believe me, Costco makes a lot of money, right? You don't think Costco, maybe they're not looking at charts like we are, but you don't think they're looking at this exact same data and making the exact same decisions? They're very, very good at it. What's the other thing they're good at? How do they get everybody to come in the stores? Under the word Costco on the sign, what's the word under that? It's on the Costco sign. It says Costco in big, what is that, red letters? And then there's a word in blue underneath. What does that word say? Wholesale, right? It says wholesale. Here's the big question. Are we going into Costco and paying wholesale prices? That's kind of what they're advertising, right? Aren't they advertising that? That's why they have it on there, so that we think we're going in and paying wholesale prices. Now, I'm not beating up Costco here, but my point is, it's the same thing on these charts. If we're going to sell at supply here, or earlier in the week, buy the S&P into demand, we need to buy from people that are convinced that it's a good idea to sell down here. Okay? When we look to sell at supply, we're selling to someone who thinks that this market is worth paying these prices right here. It's the same thing. Okay? So, again, if you're overwhelmed with this and you're trying to figure everything out and you're trying all these different strategies, that's fine. One thing I can suggest is anytime you bring any other rule or any other strategy into your decision-making process for day trading, swing trading, longer-term investing, retirement account stuff, whatever, what I've found, the best filter to run all that stuff through is this. Does what you're considering, is it in line with how you make money buying and selling anything? If the answer is yes, you probably want to look a little deeper and maybe take some action. If the answer is no, it probably doesn't work. Okay, you can't get away from those fundamental basic rules of how you make money buying and selling anything in life, right? All right. Almost forgot about this one. Now, Jasmine, got to give her the award this week. She was amazing this week, and with this S&P. So this is yesterday. She's in a session with our members, and we were looking at this level, and she found this level, and I looked at it, and other people look at it and say, well, it's been here a bunch of times. She said it's barely touching the level. And one of our key other markets that we use to make decisions in the S&P was doing what she needed it to do. And sure enough, a little bit later, this is on Wednesday, price shot out of this level. I'm sorry, yesterday, price shot out of this level. And so she was right. Demand exceeded supply in a big way there. Once we got that evidence, that secondary evidence, that there was a big supply-demand imbalance here. A little while later, price came back into that level for the people in her session, and anybody that wanted to was able to buy a low-risk, high-reward, and high-probability opportunity, long opportunity in the market. Does that make sense? Yeah, she was definitely on fire this week. She always is. She's fantastic. All right. Well, again, these sessions are meant to be, 30, 40 minutes long. I tried to talk slow, so hopefully you understood what we're talking about here and how it all works. And on that note, for some of you, you can always come to the workshop and get more of this if you want. Otherwise, it was great being with you. And everybody have a fantastic weekend, and we'll see you next time.